You're watching Dukascopy TV. I'm Elaine Stenson. Japan's factory output unexpectedly fell in February at the fastest pace in 8 months, leaving the economy in a precarious position as the new sales tax hike threatens to slow consumption and undermine the government's revival plan. Some analysts say that as the national sales tax rose to 8% from 5% on Tuesday, the Bank of Japan should be ready to roll out more stimulus. Shinichiro Kadota is an FX strategist at Barclays in Tokyo. He joins me on the line now. Shin, is more QE the answer for Japan?
In terms of the tax hike, the payback from the surge that came in on the first quarter is already well expected. We do see a first quarter growth for Japan at 3.1%. And payback to be negative 3%. So that is actually well expected. So I don't think that a QE right now would be the answer. I think that for BOJs to do QE, I think the reason would be from the inflation side, which BOJ Kadota already said at the January meeting that it's going to stay around this level for about 6 months. But afterwards, I think that there's a chance that the inflation will surprise to the downside relative to the BOJ expectation. We expect July as a timing of the additional easing.
Has there been much of an impact in the lead up to the sales tax hike in terms of a surge in consumers buying early to avoid the tax?
Yeah, there's definitely a surge in expectation of the tax hike. We, as I said earlier, we expect the first quarter growth to be 3.1%. Accelerating from the 0.7 in the fourth quarter last year. So we do see a substantial increase in the consumption and the GDP growth for the first quarter.
Many are already expecting that the Bank of Japan will top up its asset buying program later this year in order to achieve its 2% inflation target. Do you think that the 2% target is achievable at this stage?
We actually do not expect them to achieve 2% anytime soon. That is why we're expecting July additional easing. I think why July? I think the effect of Japanese yen depreciation was likely to start to fade around summer this year. And also, we don't think the wage increase will be enough to offset that fading effect of the depreciation. So in that sense, we expect inflation to stay around this level, between 1 and 1.5% for quite a while. So we're not seeing 2% anytime soon.
How concerned should we be about external factors such as the Ukraine conflict and the Chinese economy posing risks to Japan's economy in terms of exports?
Yeah. I think China is a bigger concern for Japan, given its bigger weight in trade balance. But said that, I think there has been more better signs recently. As the Chinese Premier Li Keqiang recently suggested of the additional stimulus plans could be coming out to support growth. So if that does materialize, I think that will be positive for Japan, and I think the market is reacting positively in general in the FX market, with like Aussie rebounding and whatnot. So if they do indeed come out with some stimulus plan and push up the growth from second quarter on, I think that would be positive for Japan. But always we have to be watching out for shadow banking and all those risks that could possibly slow the Chinese growth, and that could in turn negatively affect the Japanese growth.
Okay, Shin, we'll leave it there for now. Thanks so much for joining me on the line today. And that's all from me for now, but I will be back tomorrow with your weekly wrap up. Bye for now.